Good morning, everybody. It's Wednesday, March 8th, 5:30 a.m. Central Time as I speak here. May corn futures up a half cent at 634 and three quarters. May soybeans down 3 at 1512 and a half. May Chicago wheat down 5 and a quarter at 692 and three quarters. May Kansas City wheat down 3 at 796 and a quarter. May spring wheat down 2 and three quarters at 850 even. We're going to start off with Ukraine and the Black Sea here this morning. Spring planting has begun in Ukraine. Reuters reports that farmers are eyeing negative operating margins pretty much across the board due to higher costs of logistics, risks associated with the war. Fields in the eastern and southern parts of the country need to be demined. The chair of the Ukrainian Agrarian Council expects corn plantings to decline by 20% from last year. Ukrainian farmers harvested 13.5 million acres of corn in 2021. That was prior to the invasion. Last year, they harvested 9.8 million acres of corn. That number could drop below 8 million this year if these estimates are correct or near reality. So, like if you're talking pre-war versus post-war, say 2021 harvest to 2023 harvest potentially, you could be eyeing a decline in corn acreage of like 40% or more, which is substantial. Corn is expensive to plant. There may be some other alternatives out there, and we know that there's kind of a cash crunch in Ukraine as far as these farmers are concerned. So big time issues here. The Ukrainian government projects that total crop acreage will decline by only 5% this year, so they've got a little bit more of an optimistic estimate, but big time problems, of course, as a result of the war. The UN is in discussions with Ukraine regarding the Black Sea grain deal. UN Secretary General Antonio Guterres arrived in Kiev this week. A UN spokesperson said Guterres would discuss the continuation of the Black Sea Grain Initiative in all its aspects, as well as other pertinent issues. The problem here, as far as I can tell, is that Russia is absent from these discussions, and Russia or Moscow, Putin, whoever, they're going to need to sign off on any extension of this deal, which is set to expire on March 18th. There hasn't been a ton of fresh news here this last couple of days, but I think we've got to keep an eye on this as that deadline approaches. Hey guys, I did a premium video yesterday. It was called this Joe Thinks the Market Messed Up 2023 Acres. I have thought for a while that the soybean market should have made an attempt to buy acres here in the United States, and it didn't. I think as of right now, it's fair to say that corn won the acreage battle. I went through some of my ideas and why I think the market kind of screwed up this whole deal. If you guys want to see this video, sign up for the premium subscription today. $50 a month, cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else, guys. Just a ton of information direct from me every single business day. China warned the United States, of potential conflict yesterday. Some tough talk from China, some geopolitical stuff here this morning. China's foreign minister warned that Beijing and Washington are headed toward conflict and confrontation if the U.S. does not change its path. The minister said that U.S. policy regarding China has entirely deviated from the rational and sound track. He said, if the United States has not hit the brakes but continues to speed down the wrong path, no amount of guardrails can prevent derailing, and there will surely be conflict and confrontation. Such competition is a reckless gamble, with the stakes being the fundamental interests of the two peoples and even the future of humanity. Chinese President Xi Jinping made some similar comments earlier this week. He said Western countries led by the U.S. have implemented all-around containment, encirclement, and suppression of China, which has brought unprecedented grave challenges to our nation's development. A spokesman from the White House did not say too much about this. He said the U.S. has no plans to change its posture toward China. So China with some harsh words here. Does this mean anything? I don't know. On to more China ag-related news. China imported a record volume of soybeans during January and February. Combined Jan-Feb imports totaled 16.17 million metric tons, according to Chinese customs data. That was up more than 16% versus the same period last year. So some people would point to the reopening following 3 years of COVID lockdowns as a potential reason for the increase. I think maybe the more accurate that might be part of it, but another piece of it is that you have some minor delays in Brazilian soybean harvest, and as a result of that, you may have seen some additional shipments from the U.S. in January, February. March imports probably declined because Brazil, again, is behind just slightly. That was according to one analyst cited by Reuters. We do have a crop report today. This is the monthly crop production and WASDE report. It will be out at 11 a.m. Central Time. I'll run you through the estimates real quickly. On the U.S. balance sheets, you may see a slightly higher carry-out projection for U.S. corn, and that would be the result of some demand reductions. You may see the export projection reduced because of the poor sales pace, shipment pace, maybe ethanol as well. They don't have to make those changes today, but on average, the trade expects that they will make some downward demand revisions on the corn balance sheet. Soybeans should be pretty close to last month. Same thing with wheat. When you look at the global balance sheets, maybe slightly tighter corn, slightly tighter soybeans. That would probably be due to Argentina production cuts. And then you look at South America. I mean, the trade expects big cuts for Argentina, but these numbers, like your 36.7 for soybeans, your 43.4 for corn, those are still above most of the private estimates. So I find it hard to believe that USDA is going to surprise the trade in any way, shape, or form with these South American production estimates, because I think the trade has become well aware, of course, of the private estimates that are floating around. Guys, this report will be out at 11 a.m. Central Time this morning. The Fed may be even more aggressive with interest rate hikes. This was the big news yesterday as it relates to the outside markets, the stock market and crude oil, stuff like that. Fed Chair Jerome Powell spoke at hearings on Capitol Hill yesterday. He told the Senate Banking Committee this: the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes. We're looking at a reversal, really, of what we thought we were seeing to some extent. Nothing about the data suggests to me that we've tightened too much. So this really scared the market yesterday. The Dow Jones was off almost 600 points. The S&P was off 1.5%. Your current effective Fed fund rate is 4.625%. That number was 0.375% a year ago. Traders now expecting a half-point hike on March 23rd. Traders had expected a quarter-point hike prior to recent events. So the outside markets, financial markets, your stock market did not like this. It resulted in a sharply higher U.S. dollar, which you could argue is negative the commodity markets. The cattle market was kind of quiet yesterday, just mixed action there. Feeder cattle mixed as well. In the outside markets this morning, the U.S. dollar is up marginally. The S&P up 6 points. Dow Jones up 40 points. Gold is flat. Crude oil is down 11 cents at 77.47. Have a great day, guys. Report at 11. I'll talk to you Thursday.